Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by John Deere. You might be wondering why Greg Machinery Pete Peterson's not here and Aaron Fennell's here, but Greg is took a trip over to Scotland to do some golfing, so can't blame the guy for that. So I had to call out of the bullpen here. You know, bring me Fennell, and he came out of the bullpen. So how you doing, buddy?
Ricky Vaughn.
That's right, man. How you been?
I'm good. Good. We've gotten a little rain on the high plains.
We have gotten a little speckle here and there.
Kind of. As far as coverage, pretty damn. Most of it. Most of the high plains got some rain over a period of the last couple weeks and reminded us that green is a color.
It is, yeah.
And we sure need a hell of a lot more. Yeah. So
yeah, I think the last.
But at least it rained. At least we know that it can again.
Yeah, it's crazy. Now here we get 15 inches of rain a year on average, give or take, and we're 16 inches behind. So that means in order for us to have a drought situation, we need 16 inches of rain,
right?
Just to be in a drought, not to be in a full blown. We're going to generate a new color for your drought map out there.
Yeah.
So
they got to such a dark maroon it went black.
Yeah, they're like it's just bad out there. So
right.
But then the flip side of that, you look at guys in the east, and there's still people out there that I talked to a friend of mine the other day that was in kind of covering that. Northeast Kansas, southeast Iowa, over into Missouri area, and there's guys there that still haven't even gotten in the field yet. So I mean, this has been so wet, and first cutting of hay hasn't been done yet because it's been so wet. So it's just like two dynamics, you know. There's
either you got, and there's been a lot of replant beans throughout the plains area in general.
Yep, for sure.
They don't do so well when they get planted and it's dry and then they get pounded with rain. Not here, further east and whatnot, but
yep.
Quite a little action going everywhere. Seen some surprising yields in the poverty grass out of Kansas.
Yeah,
here and there on the socials. Surprising being 30.
Yeah. Yeah. Well, when you're expecting negative bushel.
Well, yeah. When far more has been zeroed out and planted to something else than is going through a combine.
Yeah. Yeah, it was
30's almost shocking.
So my brother lives in Medicine Lodge, Kansas, so we went down, you know, when I go see him from Scottsbluff down there, I kind of diagonally across the state from about Goodland down to Medicine Lodge, Dodge City and all that kind of stuff. So
right.
I got to see the wheat where the actual head of the wheat was longer than the actual stem. So
right.
It was a very, very dismal thing. But you know, go back east and you start looking the eastern side of the state. I do a walk every year. We walk across Kansas for about 60 miles, and there was some of the wheat out there didn't look too bad on the eastern side, but still it wasn't like it normally looks. So
right,
you know, it's kind of working its way through, but. Which, you know, opens the door up to, you know, you start talking about the equipment side of that. Typical time of year where we start, you know, people are starting to make some decisions about what they're doing. But just like every other bottom that I've been through on a downturn, you start seeing this window open up where the quote unquote, I always called it the price effective equipment, right? So that was you kind of pick your range, but that $150,000 to $50,000 range equipment kind of starts falling in there, and you see more and more people picking that off as you go through, and that's not any different than now. So, what are you seeing as you go through your sales cycle, Aaron?
You know, kind of across the country, state of the union, if you will. There's a lot of for what the ag economy is, there's pretty good action out there. It is, I frequently on here say there's a hard line in the sand at 3 or for sure 4. and we're just in an economy where that's fact.
Right.
But starting to see more than usual reaching over that 4 line, getting into the late model low hour stuff. I'm going to say the under, well, pretty much 24s and 25s.
Yeah.
For as far as model years. Those two are getting a little more traction than I expected, honestly. Tractors, combines across the board. Choppers, the hay and forage business is obviously in a drought out here. We're a little slower, but here we are. We do a substantial amount of early chop out here, green chop off circles and stuff, dairies and feedlots. And that has started the chopper business rolling, obviously. Yeah. We usually, we do our new swaps right about now. And usually, much like planters, that's when you kind of get your pick of the litter in the roll units. Yeah. And, you get a couple of them picked off early. That certainly helps. And we've done that. It's just a matter of, everything, regardless of what segment you're talking about, everything is just a constant pivot. Right. You'll be headed this direction and then, okay, now we're over here. And not that isn't, kind of commonplace in the business, but usually you're kind of dealing with a segment, a time of year kind of thing. And honestly, for 18 months, that's been in the wind. You'll be selling combines in March and planters in September, and everything's just kind of whenever. But I kind of chalk that up personally to the world of the last minute that we've been living in for a couple of years, given prices and interest rates, which fuels that. And then you couple that with not only the last minute, but what's going on their farm with dollars and cents and all that. And you sell a planter in September. Why? Because they're in the field and they know what they got. Right. And now we can act on it. Mm-hmm. It's just it's a wild world, but there are the things that really surprise me right now is the reach up into the 24s and 5s that I really wasn't expecting. And just
what do you mean by that?
Well, like I've said on here a few times, different times there's been different line in the sand, if you will.
Sure.
300 is a chasm in the sand, not a line. And it's just locked in because for the longest time, that was the upper limit for ages and ages and ages. And then we hit 4 and then we hit 5 and dear God, there's 6s and 7s out there now.
Right. Yeah.
But so that you always got that 3 line, and I'm going to say your A- to B customer, that's kind of the ceiling there. Mm-hmm. What I mean by the reach is, for the longest time, well, like always happens, when we hit this great big run up, that late model used buyer jumps new, and we lose him in his market segment. And then that late model low hour sits there. That's what we ran into, right? Same thing we ran into in 10, 11, 12. Exact same problems. Well, that has had a wave to go through now. And I'm 99% sure that buyer is showing up to get the things he usually does. Okay. The amount of multi-unit deals across the country, regardless of color, so many of that was shut down in the last year or two. Things are getting back to a centered kind of hit the big restart button, and now here we go. Last year was kind of the start of normal coming back in a way. And this year you're seeing more of that as we move forward. Does that make a little more sense?
Oh yeah, it makes a lot more sense. It makes a lot more sense in the fact that you're seeing some movement away from just a certain band of equipment, right? Like you're seeing some broadening of buying habits and those kind of things. Not
right.
No one's setting the world on fire by any means, but it's very much it's not because there for the longest time. You look at auction results, you look at auction activity, you look at dealership guys you talk with and those kind of things. And I think a couple things might be playing into this, but I mean, like, rewind 6, 8, 9 months ago, and if it was 5 to 12 years old, there's everybody and their dog was looking for something like that. I mean, there was stuff was flying off the shelf, and the dollars associated that were very strong, right? I think a lot of that stuff that we see now, some of the movement that we're seeing inside of that might be attributed to some of the fact that a lot of that stuff's gone now, right? I mean, you look at so Greg and I talked about this last week a little bit, but I've watched this happen 3 or 4 or 5 times over my career now, where you get to a certain point in the cycle and you get things kind of get hollowed out, right? So what was once this is the premium cherry piece of equipment, the hour range, the condition wise and everything. And I kind of gave a guy an example the other day. It's like, you go to a car lot, used car lot, and you're sitting out there front. There's 5 cars sitting out front, and they're immaculate, beautiful, right? Shiny paint, nice tires. Inside of them are great. There's no blemishes. They got low miles on them. Interiors are great. It looks brand new, right?
Must all be GMs.
Well, something like that. And those 5 get sold off, right? And let's just say all of them brought, $25,000 or whatever, right? Well, the line behind them are the next levels up. Miles are a little bit higher. Tires aren't bad, but they're not quite as good as they were on the first ones. Maybe a nick or two here, door ding here and there, those kind of things. Get shiny paint, but just a little bit rougher than what the
character
ones were. Right, a little character. Well, now your choice is, I can buy these next level machines because it doesn't matter anymore what the previous one sold for, because they're not available anymore, right? They sold for $25,000 and they were mint condition machines, right? The next level up, as you go to that next line, I'm not saying they're going to sell for $25,000, but they're not going to sell for $18,000 anymore either, right? It's that next level up type of thing where you're like, this is now your choice. This is what would be considered premium, right? And they kind of move down to, instead of 25,000, maybe they bring 22,000, right? And those kind of things. So that gets ratcheted up over time. And then now the $25,000 car shows up. Now it brings 30, right? Because it's that much better than what's available, right? Some of that stuff we were kind of seeing happening now. A lot of that stuff got chewed up, right? It's not there anymore. So to your point of why do you see some people moving up into different levels of equipment that haven't been that active? It's kind of because that's what's available, right? In a lot of ways.
Oh,
right?
yeah.
Yeah, I mean, they didn't want to spend $300,000, but they were going to spend $200,000, right, or $250,000 or whatever the number might be. So now they're like, well, we need to do X, so here's what we're doing. So the last bit of stuff too that you've been talking about as well is, I've been holding out for this specific machine, and when that specific machine shows up, I'm not going to move on it. And I don't care if it's the middle of planting season or the middle of harvest. I'm ready to make that move now. And I think that's some of that stuff is right. Other things too is, it's financial stuff and the banker dragging their feet and those kind of things, getting those things moving on. But there's a big hole in used inventory right now that's been hollowed out. That is, you can go, there's a little bit left in there, but it's not the premium cherry stuff that we've seen in the past, right?
Right.
So now do I want to spend $50,000 here, or maybe can I go spend $75,000 or $100,000 and kind of get something that's maybe a little different than what I've been looking for? I kind of feel like that's some of that stuff that's going on.
The other thing, if I was to peg something as hot, and I laugh for a reason, but if there's anything that's hot right now, It's the 8R with hours.
Right. The
An 8,
4,000
everybody and their dog wants an 8R, which this is what we constantly talk about.
Right.
There are so many guys that go get the new and run them to 3, 5, whatever. Then there's another group of guys that usually get those and run them to 15. Then once you get to 15, Katie bar the door, everybody shows up and wants that damn tractor. The 8R and by that I mean literally the 8R 340, 8R 370, the current new style. Those things, and I'm going to say just a little over 15, because I think at 1,500 hours, you're just not quite there on price point. But you get them things to like 1,800 to 2,500, maybe even up close to 3. Fly out of here.
Yep. Yeah.
Because there's a guy with just like we constantly talk about on here, the guy with the 5 to 10. Mm-hmm. Or the 10 to 15 or the 10 to 20. All three of those guys want that tractor.
Well, I think, and a couple of things too that have kind of shaped that a little bit. So let's go back and think about how the hours on machines have grown to what they are today, right?
Oh, yeah.
So think about it. So go back to 2020. You order a new tractor. It gets delayed, right? So now you got to run this machine an extra season of use, right? The order goes back in, it gets delayed again, so now you get another half a season of use on it. So now what you're talking about, what you normally would see, now you're talking about, let's just say, I'm throwing numbers there, say you put 500 hours a year on a tractor or whatever. You got 500 hours when you normally would trade it, now you got another 500, so now you're at 1,000. So now you're when that machine actually comes in on trade, it's 1,250 hours, right?
Yeah.
That was a very common experience, right? Well, now let's think about this. Now the economy kind of drops off a little bit. I normally trade my machine off every 3 years, my used machine every 3 years when I trade it, right? I put 1,500 hours a year on it or whatever the number is, right? So I should be getting that 2,000 hour machine when I trade it back in. Well, the economics aren't working out for me, so I'm going to go ahead and keep it another couple of years. So when I'm trading that machine in now, it's sitting at 3,500 hours, 3,000 hours, something like that. That changed the landscape of hours on the machines. Like,
for sure,
to be the normal range for which of as far as age of machine goes, it went from being it exploded, like it just really exploded out. So to your point, you start looking at, hey, I want to buy a 4,000 hour machine, a 5,000 hour machine, a 3,500 hour machine, whatever the number is, because I'm trading in my 6,000, 7,000, 8,000 hour machine.
Yep.
I'm knocking it down 5,000 hours by going backwards to that. I'm not saying that's uncommon, like that didn't happen in the past, but that range of which people traded in and the hours it has grown so much that now what is acceptable hours on a quote unquote mid-level, I'll call it a mid-career tractor, right? Where it used to be 2015. When I first started, 1,500 hours was on a 5-year-old machine was a 3-year-old machine was like, oh wow, man, he's got some hours on it. Now you're like, only got 1,500 hours on it. Right. It's like that dynamic has changed of what's acceptable hours for a year model machine has been greatly widened.
Well, the other factor that goes into that too, Casey, that isn't, it's related to the machinery business, but not directly. There used to be 5 of those tractors.
Right. Yeah.
Now there's 3.
Yeah.
But the hours out there are the same, if not more.
Yeah.
Because Bob, Joe, and Tom all quit, but Greg took over all 3 of their farms, and his tractors are bing, 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 bing.
Yep.
Plus, the other thing, for the longest time on we'll say the 2010 to 2020 8Rs, the first 2 generations, or 3, those used to have that 3,000. I want that under 3,000. I want that under 3,000. Maybe if we have to stretch 3,500. That is a museum tractor now.
Right.
Because just what you said, running, And it affected the lower tractors, I think, more than the later model ones for sure.
I agree with that. Yeah.
Running. And now all of a sudden that tractor that you wanted to try and find at 35 if we got a stretch is 5 to 55.
Yeah.
Now it's, hell, I got one with 4,950 hours. Here comes everybody,
Right.
This one's got 4,975 on it. Go grab it.
Yeah. Yeah. No, I think you're right. I mean, you start looking at how all that stuff plays out, and it's just the dynamics have shifted. I mean, it's not, and associated price and everything else with that too has changed too. So I mean, it's the dynamics of which you were doing. So I talk a lot about these buyer blocks, what that looks like, and where people fall in these blocks all the time. It's a blessing and a curse at the same time, right? It's a double-edged sword, right? Well, that farm A and farm B, are going to go out and do these things because just like your example earlier, you had the 3 farmers that have retired or gone out of business or whatever it is, and you got one guy left. With the efficiency of equipment right now, I don't have to go out and buy another combine or whatever, or another couple tractors, another grain cart, those kind of things. I'm just looking at it from, all right, so I got these 3 farms now. I'm going to extend my planting window now by 12 days, right? I'm going to expand my harvest by, 15 to 18 days or something like that. I don't need to add anything to make this happen. When I first started doing this, if somebody sold a farm, it wasn't uncommon for them to sell the equipment along with the farm as well, right? I mean, that was just part of it. And today you just don't see that as much, and that's these auctions that you see happen and stuff like that are kind of driving some of that. So when you look at the grander scale of what's going on, the hours are going to continue to be a dynamic part of the conversation because of what is now considered to be quote unquote average season of use on a piece of equipment. It's going to continue to grow as more, if you had 12 days to your planting season, right? So you're going to be somewhere in that 120 to 200 hours, right? That's what you're going to add to that machine when you do that. So when you look at your harvest and you add, 10, 15 days of that time frame, and you're looking at somewhere in the neighborhood of, another 150, 200 hours. I mean, so it's just like all those things change the dynamics before you start thinking about adding another machine, which then comes back into that same conversation that I've had on this show, as well as I've had with bankers and those kind of things. It's like, guys are looking at their operations saying, Dad and Grandpa farmed the same ground with 4 tractors, and I've been doing it with 6 for the last 10 years. Do I really need 6 tractors?
Right.
I might only need 3, right? And so that dynamic's starting to kind of weave its way into this whole coverage. So I guess what I'm getting at here is
basically what you're saying is when the farm economy goes south, you're going to have to hook and unhook a little more.
That's right. Well, I also think too, when you start looking at just what the new normal turns into, like I don't see a place in time where, oh, cool. Well, we got, the price of corn is now $7. I've been running 10-year-old machines, 6-year-old machines, 8-year-old machines.
Right.
And I'm going to now go from a 9600 to a 9770 in 1 year jump, right? Like it's not going to happen, right? Which was pretty commonplace in the early 2000s. Was like, I went from having a 7 or 8 year old machine to now I'm buying a new one, right?
Yeah.
That doesn't happen. That's not going to happen now. I think these blocks that you see happening, people are going to have to live in those blocks because it's not just the price of equipment, the price of inputs, the price of labor, all the things that come into that are going to render a person to where they have to stay in a certain place, which isn't a bad thing. It means that you're going to have you should have a healthier used equipment space. And some means that you should see these huge dynamic swings in price where, it goes from being, a 1-year-old machine goes from being here and then it loses 50% of its value because of oversupply and less in demand. Like, you shouldn't have that problem.
If the boxes remain the boxes, you eliminate market flooding.
Right. And it should just kind of stay in that particular spot. Now, that doesn't mean that you're not going to have, if you got one combine and you don't have any buyers, you got one too many combines, right? I mean, that's just how it works.
Right.
That's just you're oversupplied by one, right? So that's, as those dynamics work through, like those are the things that are going to drive the marketplace. But I just don't see these huge magnanimous swings in the marketplace that are just going to be catastrophic, nuclear bombs that go off and then we spend the next 3, 4, 5 years trying to figure out how to do it. And then, we're working our way. I just don't see that, because a couple of things, I think, we've been talking about this whole show, but you're going to start extending out the trade cycles and how people are going to focus and work on those. And you're also going to start looking at what's my actual cost and throughput and all the different stuff that go into a machine, where you start looking at it from a more dynamic position of what's it look like if I do some of these bigger repairs, and how's that affect my price, and what does that depreciation look like, and ultimately, like, how's that come out to work out and play? Like, a lot more conversations like they're going to be had, and I don't see those going away. I just see it being more of a higher price machines mean longer hours and longer use, where you get a bigger bang for your buck at the end of the day, I guess is what I'm saying.
Oh yeah. Yeah. That's, and I shouldn't say until we've just come to a place where when you look at the price of new and anything, any product, any color, I don't care what it is. I don't care if it's an auger, everything. And then you correlate it with them boxes. They all but have to stay that way.
Yeah. Yep.
And that's if you are, as we talked early on today, everybody jumping out of them boxes at $7 corn, even if you're the guy who is buy the 1-year-old and it's really no big reach to go switch to new, 3 guys do that and it screws up the world.
It does. It really does. It really, and it like irreversibly screws up.
Not that, farmer ABC can't, he's more than welcome to go buy all the new he wants. That's why we're here as dealers. But for the sake of the used equipment space that this exists for, it creates problems.
Well, I mean, it's an ecosystem, right? I mean, you go pull mountain lions out of the ecosystem, and now you have a deer problem, right?
Exactly.
You go pull deer out of the ecosystem, and now the mountain lions all starve. I mean, it's just like there's a give and take there, and I think that
you reintroduce wolves into Colorado, and you have a wolf problem.
You do, right? Yeah, you have a massive problem. But like those kind of things where you've got, like, you start messing with stuff, and it ultimately turns into something worse, right?
It's really surprising how much the used equipment world is. You said it perfect. It's an ecosystem. It all plays off of itself, and when it's healthy, it just rolls.
I mean,
we haven't seen that for a while, but when it's healthy, it just rolls like it's supposed to.
Ultimately, at the end of the day, what happens that blows up the system is that guys that typically buy that 1 to 2 year old stuff go buy something new.
Yep.
And they're out. And there's no more. The dealership has taken them out of being a 1 to 2 year old buyer.
Well, and when that happens, Casey, we never have like a 50-cent ramp up. It's always like a $2 jump.
Oh yeah, it's a huge swing. Yeah.
So that in their brain is like, I bet half the time they think they have to for the tax side of it.
Yeah.
Yep.
And I get that. But I think at the end of the day, when you're looking at what does it mean to be this?
Right.
If I'm a dealership, if I'm a used buyer, if I'm a farmer right now and I'm looking at this, like, do I get a small discount from the manufacturer for buying something new, or do I get a 15 to 18% discount for buying a 1 year old piece that's got a few hundred hours on it? I'm going to take a look at that bigger discount. I mean, you're getting warranty. You can. The biggest thing I get all the time is, well, I don't get the same kind of warranty. Well, yeah, there's ways to get the same kind of warranty.
Oh, yeah.
There's plenty of ways to do that. And your dealership should be open to those ways of getting you the same kind of warranty, right? There's those kind of things that are out there. But as you work your way through that, as those guys move in, that's what happens to the marketplace. That's why it shatters when it comes out of these big booms, right? You come out and the shatters with, and so that one guy that's typically that 1 to 2 year old buyer is like, well, I've got some new stuff. I don't need to go buy anything right now.
Right.
So now they're out. Which that front end of that 1 to 2 year old stuff is where people run into those issues. And as those things get chipped away, that's why you go see, we're going to have 45 combines on sale at this next auction in one day. And then we're going to sell, 65 row crop tractors all in the same
right.
Like, what are you doing? Well, that's what happened. And then that's just what happened. Right? So some of those things, those dynamics move along. So anyway, I could go on and on about that, but I won't. So ultimately, at the end of the day, I feel like we're in a good spot inventory-wise and how the quote-unquote ecosystem is going to continue to play out. And I think this is going to be healthy for everyone as you work your way through this time frame. So that's
for sure.
All right, buddy. Any last thoughts you want to throw out there before we shut it down?
No, I think we covered her, my man.
All right. Well, tell people how they can find your sweet deals over at High Plains Wholesale.
Well, I tell you what, High Plains Wholesale has a Facebook page and a TikTok account page, whatever, stream, if you will. I also, so you can look those up, High Plains Wholesale on TikTok and Facebook. I also share those same specials on my Twitter and my Facebook, which are both just my name, clever enough. Or you can call me or text me, 308-760-1193.
Right on. Aaron, appreciate you being on the podcast. We'll catch you again next time.
Right on.
Stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you.
See you next year, loser.
That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with ExactEmerge and get accurate singulation and spacing at 10 miles per hour. Or choose ExactShot to promote early root growth and cut fertilizer costs. And with FurrowVision, save time by verifying seed depth right from your cab. Visit johndeere.com/planner upgrades and see why nothing runs like a deer.
All right, welcome back to Moving Iron Podcast. Got Sean Hackett on from Hackett Financial. He is out of Boca Raton, Florida. And Sean is nice enough to come on and talk about what's going on in the world of commodities. Sean, how you doing today?
Doing super good. Glad to be back here in Florida from my time in Duluth, Minnesota.
63 in the summertime might as well be winter, right? And when you're from
It felt like winter to me.
So. Yeah, that's what I thought. You had your parking on, and everyone's like, "What's this guy doing?" Okay, so
yeah, they all looked at me like, "You're not from here, are you?"
Yeah, you're not from these parts, huh?
No, you're not from these parts.
All right, Sean, let's talk about what's going on in the marketplace. You've been talking about this for a while, man, leading up to here that you thought there was going to be a mid-month reversal. Here we are, the mid-month, and you're starting to see some signals that are headed that way. Talk a little bit about what you're seeing in the markets right now.
Well, first thing was, you can only unwind a trade for so long. So like we had all this short-term traders in this energy trade and fertilizer trade, and we all piled in. And then, of course, Trump knows you can't have sky-high energy going into the midterm elections, so they've kicked the can down the road with some temporary deal, and of course the crude oil market has collapsed. I mean, I guess down in the low mid-70s now, and gasoline has collapsed, and diesel is collapsing. So we had to unwind. Everybody that was buying commodities for that reason had to unwind, had to sell, and I think we have done that. Everybody who needed to do it for that reason, that is now out of the market. I don't think weaker energy from here impacts the markets much. I don't. So that's one selling pressure that comes off. Second thing was, I do believe that China agreed and the U.S. agreed that they would buy $17 billion extra agricultural commodity products beyond soybeans but they didn't say they were going to take out the offer and gun the market higher. They just said they're going to do it when they feel it's the right time to do it. And of course, like anybody, when would you want to do it? You want to do it when the prices are corrected considerably and are offering a good deal. There's no doubt in my mind that this is a price level that works for them under any and all circumstances. And I think we're going to find out. I can't know for sure, but I think we're going to find out that they were buyers this week. And one of the reasons the markets have reversed higher is that they were buyers on the low end of the ranges that we saw here over the last few days. And any sign that has occurred puts kind of puts a floor under the market, in my opinion, to say, oh, well, if every time it comes here, they're going to be buying everything they can, then the market will worry less about the downside risk. And it will take some of the pressure off that, the momentum trade, shall we say. And thirdly, we have these two big reports at the end of the month, planting and quarterly grain stocks. Historically, these two reports, they're important because it kind of establishes the final old crop number of how much we have left over from last year. And it established pretty closely how many acres did we plant. So we have three variables. How much do we have left from last year? How many acres are we going to plant? And then the last thing is the yield. Well, we're going to get two of those variables pretty much solidified at the end of the month. And then it just comes down to weather and the yield, right? So that's why if there's a surprise in this report, if we're way off on one of these or both of these variables, it can dramatically alter expectations from what they are today to what they would be post-report. And we've seen some very significant up and down volatility, significant upside or downside volatility in this report. Given that the market has been so thoroughly trashed, the risk is, in the minds of the market, a bull surprise. And so the risk, when you're heavily short, your risk isn't that the market goes down. Your risk is the market goes up a lot and it goes against your position. And so that's why I feel there's a strong risk management on speculators to lighten their short positions ahead of this report. And lastly, we'll talk about weather in a little bit, but our short-term work and the work of some of the models that we think are getting it right are showing we could see a little bit of a heat burst, like in the center where it counts, right? We haven't seen a lot of heat in the center of the country. It's west, it's east, south, but we haven't. We think we can get a pretty good burst of heat into the very end of the month, into the first week of July. It's not a pattern change. It's not a major ridge, but it would, if we have bullish surprise in these reports and you get a little heat coming in that creates anxiety at a very important time, that could add to this reversal trade and potentially, we think, place a secondary high to the high we had in late spring in first half of July. Like we're expecting a secondary high in the first half of July. And then weather should be really good, big crops, August harvest, early harvest lows is typically what you see. And then that low is the one that I think has more durability and can lead to something much more attracted to the upside. So that's the general flow that we're expecting to see. So for those producers who haven't followed our marketing plan 100% and aren't where they need to be based on maybe missing the late spring highs, you might get a chance to do something here on this reversal into the first part of July to kind of catch up and do it on a rally instead of selling into a hole, which is never a good thing. So,
right. Yeah, for sure. All right. So let's jump out, talk about weather. You had, before you started talking, you had some stuff you were kind of working your way through. Bring up that example you had to show there.
Yeah. What we're going to do here is we're going to lay out what's called an upper airflow pattern graphic. And what we're trying to do is typically when you get into this mid-late June, what happens is the atmosphere establishes an upper airflow pattern. And once it establishes it, like it's starting to do now, it kind of sets the tone for what July and probably what the first half of August are going to be like. It's not likely going to be altered quickly when you establish it here in the latter part of June. And so I want to show it graphically here because I think it does much better to show it than to try to explain it 100%. So let's show that graph here and let me know when you see it.
Okay. All right. We got her.
Okay. So This is what's known as an Eastern Atlantic, Western Pacific positive EPWA, or positive East Atlantic Western Russian index. It's a typical El Nino type of pattern where you have high pressure out west, which is what our view is any risks to this growing season will be central to the northwest, this area. But look to this low pressure system on the center east of the country. That means cooler, wetter for the month of July. That means fantastic weather for pollination, fantastic weather for soybeans, and this should translate into the first half of August. So this is a typical El Nino pattern where you have cooler, wetter weather in the heart of the grain belt, warmer weather out west and to the northwest, and this usually means very big crops. Notice, however, over here, this is Europe. So we should see a very hot, dry European region for the most part. And what's really, really critical for them at this time of the year is finishing off winter wheat maturation and growth, and especially corn and sugar beets. Those are the three crops that this pattern it might clip the latter part of the winter wheat crop. One of the reasons I think winter wheat's up nicely today, and it would really, really hinder their corn crop. It would really hinder sugar beet production, which would really be the big crops that they grow during the summer growing season. So this is going to be a feature that could also excite grains heading into the first part of July, especially if we have bullish reports at the end of the month, and especially if we get a little heat going before this pattern kicks in. This is another region to watch. And notice over here, another high pressure ridge right over northeast China. That's what this is, for those that aren't able to follow the globe around. This is northeast China, and obviously northeast China is the core grain belt where corn and soybeans are grown in China during the summer growing season. It doesn't mean like India here isn't going to be dry. India is more of a suppression of the monsoon, not a high pressure ridge. But this is what a positive EPWA looks like. Good weather in center east, tough weather in Europe, and tough weather in northeast China. This is all something we've talked about on our show before, and something that we've been talking about our reports for months, that this would be the setup for where will we worry about weather and where we would not worry about weather. And so far, based upon what we're seeing here with this production, this upper airflow pattern that we're starting to see set up, it's exactly the kind of pattern that we've been talking about.
All right, Sean. So we've got another ceasefire agreement on the table right now. This is like the 39th one or whatever that we've done so far this year. They don't last very long. It seems like this one feels like this one's got a little different feel to it than the other ones have anyway. But I guess, Sean, as you're looking at this, let's say this one holds. What's your outlook if this one does do what they do say what they're going to do?
I think I don't think it's a stretch to think that the Trump administration realizes that they need lower energy prices to lower the inflation rate, to show inflation moving in the right direction as they go into the midterm elections, if they hope to hold the House and the Senate and or both. I think anyone would think that they would, whether they want to do this or not, I feel like they need to do this. This has long-term sticking power to it. I don't think they believe it does. I don't think Iran believe it does. I don't think anyone really believes it does. It just means for now, it's going to take the pressure off of energy prices, take the pressure off of the stock markets, can take the pressure off the things that people are angry about, and give them a more of a friendlier reason to keep the Republicans in the office that are there and keep the majority that I'm sure Trump would want for his last 2 years. Because if he loses that majority, then he really loses the ability to get anything done outside of executive orders. And then, of course, then you run into the risk that the Congress would then begin an impeachment proceeding against him like they did last time. And I would think it's not a stretch to think that that might be something that would occur fairly quickly. And so I think all roads lead to de-escalating Iran for now. I strongly believe once we get closer to the elections or we get past the elections, then I think this whole entire geopolitical morass accelerates beyond what we've seen and it gets much worse, because then there's no incentive to put the genie back in the bottle politically. And then whatever Trump and others around the world really want to do there, they're kind of unhinged to go ahead and do it, whether it's popular or not. And I'm not saying I'm for or against anything like that. Obviously, I'm for peace. I'm for not killing people and that sort of thing. But I'm not the one making those decisions. And the history of those making those decisions is they tend to make them for political reasons, not for humanitarian reasons. And for that reason, I think we should be in an impasse for now heading into the fall. The only wild card is, can Netanyahu be trusted to keep it, or will he go off the rails and create a kind of a black swan event and ruin the tenuous kicking the can down the road deal and set this whole thing in motion? That I don't know. No one can say that. The one thing I can say is Trump can control Trump. Trump can probably control most of the people in his administration, but I'm not sure anybody can control Netanyahu, and that's the big risk here, is he does something despite it all.
I believe the over-under is on Israel going off the rails, so I think that's gonna be a big factor in that. Crazy times we live in, isn't it, John? Crazy times.
It is. We've been through them before. They've never been fun before. They're always a sad state of affairs for humanity. This one is as well. Eventually, this too will end. It's just a question of how many more lives have to be lost to get to where apparently this is the only way to get to where we need to go, which obviously I beg to differ, but others in power don't see it that way. But it is interesting and it's unfortunate. But all we can do in agriculture and in ag markets and ag pricing is deal with what is in front of us, not how we wish it to be.
Okay. All right, Sean, a good place to stop. Folks want to reach out to you and get more information about what you're doing at Hackett Financial, or have them get a hold of you for a speaking event. What's the best way to do that?
They can go to our website, Hackett, Hackett advisors.com. They can also go to Agricultural Speakers Network to reach out to them and work out dates, times, logistics, that sort of thing. If they want to hire me to speak on weather or ag outlook, some of our statistics, cycles and correlations in geopolitics, there's a lot of different things we can talk about depending on the purpose and the focus of the group that you have. And I wouldn't say we're active on Twitter, but we post some stuff on Twitter from time to time at FaradX11. If people want to check us out there, that's a good place to try to keep tabs on some of the things we're thinking about.
Sean, as always, we appreciate you being on the podcast.
Thanks, Casey. We'll look forward to do it again.
All right. Thanks a lot, Sean. Take care.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.